From $187 to 1.6 billion in trading profits and then fully back to zero. In this episode, we're going to be talking about the life of Jesse Livermore, who was one of the richest men in the world back in the 1920s. In today's episode, we're going to be diving deep into his net worth changes over the period of his life, all the way from 14 years old to ultimately 57. During that time, he went broke multiple times and became a millionaire and a multi-millionaire and finally a billionaire over his lifespan. Now, was he a trading genius or was he one of the most successful degenerate gamblers ever? Let's break it down and give you the key lessons from his trading history. Jesse Livermore was once claimed to be one of the richest men in the whole world, and he did it all through trading. So in this podcast, we're going to go over his net worth over his lifetime. It was recently revealed from, I think, someone from publishing, which had his net worth records. So we're going to look over those, and we're also going to talk about his general journey and ultimately decide, was he just a complete degenerate gambler, or did he really have an edge or a knack in trading? And ultimately talk about the end of his life as well, which happened quite abruptly. Pedma knows the story a bit better than me, so I'm going to let it over to Pedma, and he can kind of talk about the early years, at least, of Jesse Livermore.
His story is pretty interesting. The guy started when he was 14 years old on the stock exchange, if I'm not mistaken, being the paper boy, and he started to capture these patterns or whatever he was seeing on the tape back then. And it makes sense because back then stuff moved very slowly. The people had to be there sending orders. The books moved very slowly. So he started to capture these, let's say, these trends when stuff would go down or up, and he started writing them on a little book, if I'm not mistaken, by the story. And he started going with a bit of money to the bucket shops at the time. Bucket shops were like places where you would send orders and you could bet on short-term price fluctuations, much like binary options today, let's say, or something similar. But this was back then. And he made a very good living as of, I think he was 14 or 15 years old at that time. And he was just taking these bucket shops on a run because the difference between the bucket shops and the stock exchange is that on the stock exchange, like we said, it was very slow. You had to send the orders would take time to settle, and then you had slippage, you had commissions. And on the bucket shops, the bets, it was just a betting shop, so no orders or no, you were not buying anything like stock, equities or something. You were just betting on the price fluctuation, and so everything was settled immediately. And so he was able to scalp the books on those patterns that he see when he saw something that maybe got momentum or something like that. So he became very good pattern recognition. At a certain point, these bucket shops were kicking him out of every shop on the street. They called him like the boy Plunger, and he had to use a bunch of tricks to get into these shops. And he made a good living doing that, but it was not consistent because they were always sending him away.
Just to pause there, I think that's kind of a perfect time to go over his early net worth. So this was adjusted for 2021 inflation, I believe, from, I think, this was like 19 something. But at 14, he had $187 to his name. At 16, he already had $37,436 in 1893, which is kind of insane. I don't know. Nowadays, I know a lot of younger people are earning money online, but still, especially for those times, to be doing that is just crazy numbers. And then do you know when he left the bucket shop, like his rough age, or no?
I'm not sure. I think it was in his early 20s, if I'm not mistaken.
Because at 20, he then had $336,755, which is almost a 10x jump from basically being at 16 in about 4 years, which is just insane. It's like that kind of compound growth is wild. And it makes sense that he was getting kicked out so frequently.
Yeah, because the bucket shops, it was not the stock exchange, so the bucket shop was actually taking the other side of the bet of the customer, right? So they were losing money as he won, and so he got kicked out. He started sending friends at one point to these bucket shops to take orders for him. Then they started picking up on it. Like the story is pretty insane of his early days.
Yeah, because then this leads to, I think, from 1890 to about the 1901. This was where he made his kind of first fortune. So at 23, he was worth 1.6 million, which is crazy. At 20, he was, he only had 300,000 to his name, so he pretty much compounded it by 4x. But then in 1901, he took a largest loss, which was on the Northern Pacific stock, where he was then in debt of $16,837. And this is
Yeah.
what I had originally posted on my Twitter, which went slightly viral. Is just I know a lot of his other jumps we'll go over in net worth are a lot larger in absolute numbers, but at 23 to be worth 1.6 million, especially in his day and age, is a crazy living. To then in less than a year be negative on his net worth is a very crazy jump. I don't think many people could handle that. I know I definitely couldn't. I don't think many people could, because losing 1.6 million is a very large sum even nowadays. But do you know like what happened after that? How he kind of recovered?
Yeah, so I think the reason for that blow up, and I'm not completely sure, you have to read the book on, I think it's Reminiscences of a Stock Operator, where he details there the story. But basically, he learned there a lesson, if I'm not mistaken, because he took a stock tip from someone that he respected at the time, and he basically went against his instincts in whatever strategy he was using at the time and started shorting that company and lost everything. So how he recovered from that was that I think at this time he went to the broker where he was trading, and asked for a loan, if I'm not mistaken, like a $500 loan or something like that. And then he went to the bucket shops, tried again, didn't make it up, and then went back to the stock exchange with some money he made on those bucket shops, but he was getting kicked out everywhere. And then he grinded that up again from a loan.
That's wild. Apparently, in 1907, JP Morgan asked him to stop short selling to halt the market's decline because he was pushing that much size. I think he made 3 million in a single day in 1907. Which just this guy has crazy life over his lifetime.
But yeah, the thing is, and maybe this is the story we're trying to get at, is like the volatility that he was taking, the amount of sizing and leverage that he was taking. It is insane. That's why he had so much returns, right? But also there's the downside. It's like, how many times did this man went broke? You
Yeah,
know?
like just looking at his net worth. So I'll give you all the major times. So in 19000 at 23 he was worth 1.6. Then in 1901 he was negative net worth, so he was back to minus 16,000. Then in 1906 he was worth 12 million at the age of 29. In the same year he was then worth $0. So that's his second blow up. Then at 30 he was somehow worth 12 million again. At in the same year as 30, he doubled, like more than doubled it. He grew it to 90 million. By 31, he was worth 156 million. In the same year of being 31, he took that 156 million down to 6 million net worth. So it's obviously still very respectable, but a lot down from 156. But then by 37 in 1914, he was negative 28 million. Do you know how he recovered from that negative 28 million? No worries if you don't, but I just very fascinated.
I really don't remember. That is
Insane
great.
that he was down that much. And then somehow the year later, he was back up to being worth 1.3 million. From there, that was his largest run. So from 38 to 52, that's when he ran his net worth to 1.6 billion. And that was his very top. At 52 in 1929, by 57 in 1934, he was down 104 million after being worth 1.6 billion. I think this kind of leads me to one point I wanted to talk about. I'll also leave a link in the description for the graph I'm talking about with his net worth, because it is just fascinating to look at. The biggest takeaway I think you can really get from Jesse Livermore is that ultimately in trading, there is a number where you need to switch styles. You cannot be this aggressive for your whole life, especially when, I'm not going to say his strategy didn't work. Obviously, it seemed to work for decent periods of time, and he seemed to get amazing returns. But it definitely wasn't one of those strategies where you could get one bad event and blow up the whole account. I don't know how. I don't think he was very systematic, right? It was mainly discretionary plays.
Um, yeah, over time he became a bit more systematic, but yeah, it was never like, oh, I buy when the SMA crossover or whatever.
Yeah.
It was more about, but he was very systematic in terms of when to ride the trends, when to enter the trends, and stuff like that.
Yeah, I do think all the people saying that there's no lessons from him, or he wasn't a good trader. Ultimately, I would agree. Yes, at the end outcome, he wasn't a good trader, but there is not many people that can turn $187 at 14 to be worth 1.6 billion by 52. It's just incredible, and especially to recover after many blow ups. So my thing would definitely be, once you hit a certain number, whatever that number be for you, ultimately money doesn't change your lifestyle that much above a certain number. So you need to start to play a bit more defensive. So I think a good example I would say is probably Lucas, or the short bear. He made, I think it was 8 figures. Yes, it was 8 figures during 2020 with his small cap strategy. And then ever since then, he's been more of a macro trader. Now, does that mean he doesn't push large size? No, I still believe he does. But he is playing a bit less defensive. He isn't, sizing 8 figures onto a single small cap stock, like being a complete degenerate. So this is where I'd say the biggest lesson, at least from my takeaway from Jesse Livermore. What about yourself?
I agree, but it's that saying, right? It's that when you make money as a degenerate, you are always a degenerate, right? And it's like, sure, I think if I was in his place, I would, at least if you have like 5, 10, 50 million, whatever, you take some, you secure your life so that you never go into debt or something like that. But it's like the man made his money that way, just being a complete degenerate. And every time he took it, like it paid off until it didn't. And was he a bad trader? I don't know. To be honest, even with the blow-ups, I don't know if he was a bad trader. I think he was trading something legit. If people read his book, he was trading momentum and trend, and was letting trends ride, and getting out of positions when he should. Like, his lessons are very solid. The problem was his risk. I think risk management. He just wanted to make a lot of money. He was very wild, and yeah, when you play with fire, you are eventually going to get burned, right?
Yeah, I agree. Like, I'm looking at all these comments because it's very interesting, everyone's take of Jesse Livermore. Like, obviously, a lot of people are saying this is a disease, you can never stop. And I'd say yes. I guess probably in Jesse Livermore's case, it definitely was. He was very addicted to those kind of P&L swings, I would assume. Some saying he was a legend in gambling, not in trading. I would say that's a bit of a stretch. I think he was still a trader ultimately because he's had very consistent year stints. Like, if you look at the graph from 38, he was at 1.3 million, to 52, to compound that whole time to go to 1.6 billion. I'm sorry, but that's like, if it was luck, that is the pinnacle of luck in a streak. Now, obviously, that could happen, but I think in some essence, there had to be something that worked over that regime. Same thing as like in 2020, everyone was longing everything. It wasn't, you couldn't say that strategy didn't work. It did work during that period of time, but ultimately it would stop. And, if everyone kept on longing the same size, that's when you get completely burned.
Yeah, well, I think it all comes down to sizing. Like, I actually have the chart in front of me, and it's like the man had a multi-decade run. Sure,
Yeah.
he had blow-ups along the way, but he had something there. He was trading something real, and that was momentum. He definitely was trading something very early that was real, that no one was trading at the time, or very little people, and the man was extracting it. The problem was that he was using like a lot of leverage and a lot of sizing to do it. If there's a simulation that you can do if you run like your strategy at multiples of Kelly, the Kelly criterion, and you see that after a certain point, even though you'll make way a lot more money running at a very high Kelly, you, you probably still won't make as much money as someone running like a half Kelly or something like that, because over time the drawdowns are too steep and will take you like down like 80 and 90%.
Yeah.
And not everyone can handle it. Not everyone can handle it.
Like, some people are commenting that it's similar to crypto nowadays, which, yeah, I guess that's probably the closest thing we saw to this would be, oh my God, what was his name? The guy that ran to 100 million, James Wynn. Yes, that's probably the closest thing we have in our decade, I guess, or at least in the retail side for crypto.
But it's crypto and it's everything. Like, right, I can do the same. Like, you had Christian Kilamagi, and again, I don't know anything of the records after, but the man made what, 8 or 9, close to 9 figures from the reports that were sent during 2020, 2021. Like, but you never heard from him again. No more like P&L reports from that time. And the defenders will say, oh, because he's retired, blah blah blah. Sure, but I can guarantee you that he went into a 60 or like a 50 or 60% drawdown after the bull market ended that year. I can almost guarantee that, because I know other traders that made multi 8 figures during that time, and that gave a lot of it back. because what were they doing? They were just using leverage beta. They were putting a bunch of size during the right time to put size on the table, but they eventually draw down. And I'm not taking anything from that. People just have to face the reality that this business is risk and volatility, and just because you made a lot of money in 1 year doesn't mean you'll keep it.
Yeah, no, I completely agree. I also think there's a big thing to talk about here that it looks all amazing having this much amount of money and to have this kind of volatility swings in some essence. But at least from what I've read online, he had a very difficult life for the most part. He was kind of struggling with depression most of it. Now he obviously lived very lavishly. Apparently, I think he had like multiple mansions, servants, and I think he had a yacht back in the day, which is just wild to think about. But I personally know, looking at this, it makes me feel a bit sick. There's no way I could handle, and that's I think why I said 23 to 24, meaning the 1.6 to being minus, because that's most relatable to me. I couldn't imagine, nowadays being up 1.6 and then the next year being completely broke and being in debt. It would just completely crush me.
Yeah, it never happened to me, but I think you're right. I think you're right. It would be very difficult to handle emotionally that swing, but maybe that's why we'll never like
Make
at least
1.6 billion.
exactly. That's what I'm going to say.
Yeah.
And again, people like the quants and the nerds will, if they listen to this, they'll make fun. Oh, you have to use half Kelly or 25 Kelly or whatever. Right, good, and good for you. But if you're going to make a living from this, you have to take some risk and variance and in volatility, and you cannot escape that. There's no way. If you are building like if I'm building a small account, imagine, let's say that I have 20 grand or 50 grand or whatever, like to reach a certain point when the income from trading is actually meaningful, I have to be willing to take some risk, and there's no other way.
Yeah, no, I'd agree. I like, how do you view, because I know for the most part you're pretty much fully in your portfolio, at least like net worth wise. Do you view taking out sums at periods? I don't want to go into a whole life situation because I don't know how much you want to share, but I think, at least for me personally, I think once you're making, what a normal salary, whatever occupation you'd have normally would make from trading, you should at least be taking out 50% of that, putting it into something long term. It doesn't have to be something super de-risked like high interest savings account or something. You could just put it in S&P 500, or if you want to take on a bit more risk, maybe QQQ or TQQQ. But something like that, I think, is where you need to diversify, especially as a trader, because as with Jesse Livermore, even though he made 1.6 billion over his lifetime, there were many years where he went completely broke. Now, is it going to be as extreme for everyone? Probably not, but there will be years where you have losing years. There will be years where you probably won't make really any money. And in trading, that's completely normal. It's not something that happens to other people and won't happen to you. I can be pretty confident if you're going to be trading for the next 30 years, 40 years, you will have years where you will make no money or you'll lose money.
Completely agree. Yeah, but that argument has two sides, in my opinion. Like, okay, yes, if you want to be conservative and you want to have a very long career, but a very long and slow career, which is the way that most people should take it, because most people cannot handle this business and they will lose all the money. 99% of the people should be conservative if they want to invest or trade or whatever. And sure, pay the house, keep everything on the side, like all the back. Okay, how do you say it? Like the fixed costs you have in your life all paid off, and
Yeah.
prioritize that. But then there's the other side of the argument. What about the people that are here for points? Well, let's say like a game, like you want to just reach the next level and the next level. What you're going to do? You're going to take everything out and cap your future potential based on that? I don't know. There's a two-sided argument that I cannot answer at this point.
That's interesting. I guess to some extent, we're kind of like the two sides of that coin, because I think you're a lot more aggressive than me. I'm very conservative for my sort of stuff. I do think there's less people I know that I truly know that can handle volatility. A lot of people say they can. So many people cannot. Like
Exactly.
the amount of people I've had that have messaged me on Twitter or something like that, and they say they've gone into a 15% drawdown and they're doubting their strategy. I'm like, come on. Like you
Yeah.
had like trading, you have to be able to handle these sort of drawdowns. It's just it is normal. There's no sort of strategy I've ever seen, unless you're doing something crazy like market making, or we should talk about that one guy on Hyperliquid that does volume, like an exchange volume bot. He's pretty much had like
Mm.
an up curve the whole time. But things like that, unless you're doing something that's a pure efficiency like that, you will have at least 10%, probably more drawdowns.
I think that 10% would be a dream.
I guess
You
in
know?
crypto, yeah, in crypto it definitely would. In equities, I think if you're pushing 30%, then that's probably getting kind of extreme, at least from most strategies I've seen in equities. But yeah, 10% is definitely very typical.
Yeah. Uh, yeah, for sure. Like you have two sides, right? People that are harvesting risk premium, we talk about a lot it, and there's other people that are harvesting some inefficiency that requires a lot of skill, and they usually pay more and stuff like that. But for my case, at least, I'm here harvesting risk premium, and drawdowns are where I want to allocate. I don't want to allocate when my equity curve is going up. That's fine, I'm there. But when I get a deep drawdown, when I get something steep, that's when I start, okay, now I'm getting more confident that we're going to have soon a pretty good period.
Yeah, what I guess one interesting thing we can talk about, especially because it would be sort of relevant to Jesse Livermore, is would you do anything different if you have a really good year? Like, would you take any money off the table? Would you allocate it any differently? Would you change any strategies, like anything like that? Or would you just keep on recompounding everything?
What do you call a really good year?
Okay, so
In the
let's take from Jesse Livermore's life. Like, when he
Okay,
turned 12 million to 156 million in
yeah,
1 year, but basically two, um, would you play it any different?
yeah, and I can say that confidently because I was talking about this with my brother actually, and I think I view it two ways. There's a time where like how can I say this? Where money is the incremental like increase in money is more meaningful to you. For example, if I go from $100,000 to $200,000, okay, great, amazing. But my life didn't change much, right?
Yeah.
Like I'm not here to make $100,000. Like I want to play the long game. I want to see how much level I can get relative to living costs today, if that makes sense. Now, if I make $10 million in a year, and I never had $10 million before, I want to take at least 2, 3, 5 million from that, pay everything, secure my position in life, put it in index funds, buy properties, do whatever just to secure my life and my family's life, and then take the remaining money and compound that to the moon if I can, you know? I think it is a question about what kind of money makes it meaningful that your life is set. If you have on your end your life is set after this, I think that gambling it into the not gambling it. I'm not saying that we are here gambling, but I'm saying that there's so much risk that can happen. You can get hacked. You can have a really bad loss because your algo like misallocates or something like that. Like risking your future, your family's future, and your own future that was set, and risking it for a few more dollars that doesn't even make it doesn't change your life. Like go from 10 million to 50 million. Yeah, it's great. But what, you're going to buy a new yacht? That's it. It doesn't, it doesn't change your life meaningfully anymore. But going from 10 million to zero or to that changes your life and puts pressure on your family. So I think the evaluation has to be on the meaning of money.
Yeah, I think I would totally agree. I think that's how you would pretty much play it. I also think in some essence, tr- it's hard to say because I know people have different like outlooks on it, but I would say for the most part, no one is trading purely for the like. I don't know how do I say this. Like we do trade for the love of the game. Like I love researching things. I love doing strategies. I love backtesting things like that. I love also meeting other traders. But for the ultimate purpose of trading is extraction, right? Like we're here to make money and we're here to change our life or our family lives or secure our lives or things like that. There is also the other side of the game where you can do it for competitiveness. But I think once you make those sort of big jumps, as you're saying, taking some off to secure everything so that first off, if you secure your main base, you'll only do better decision making. In the same way, I like to think about it that when you have no or you have very limited capital, there are countless opportunities that as long as you survive long enough, you will find something that probably works over a long enough time horizon. In the same way, if you have a lot of money over a long enough time horizon, there will probably be something that could take you out. And I like to
Mhm.
think about it in both ways like that, is that when you're down bad and you don't have that much money, I like to think about there's countless, opportunities out there in the future. I just got to survive as long as possible. But once you have a sizable amount of money, there's so many things. As you were saying, it could be an issue of your algo. It could be simply a market crash that you were over leveraged on. It could be one simple bad bet that you keep on adding to, all those sort of things. So to have everything secured in essence, I think is the most important thing, at least in my view.
Yeah, I think that I like outside of having edge, of having a real edge that people can extract. I think that one of the major issues that most traders can't make it is because they have too many expenses to pay. They have a lot of responsibilities, and it's hard to separate long-term growth from like income, like receiving money every month or every year or whatever. Like people cannot go 2 years without making money.
Yeah.
So, and if you are doing this the way that I do it, you have to, you need to do that. And people cannot handle that. And so securing life, if someone gets to a point where they can do that, I think that's more important that instead of making 50 million, you make 100 million or make 200 million. Like if someone can secure the life early on, I think that's much more important, in my opinion.
I agree. I think the key word there is like desperation, because anytime you're really desperate as a trader, that's when I know I'm making the worst decisions. Is when you double down on something stupid, or you over leverage to try and push something to be a bigger winner than it really, is going to be, or something like that. And also, all the times when you're no longer in that desperate phase or mindset, etc., you can look back on those decisions quite clearly and understand that they were just not solid decision making. At least I've been able to. So I think once you are able to have that foundation and not be in that mindset, it's a lot easier to think clearly, deploy strategies better, think about strategies better, all that sort of stuff.
Yeah, for sure. And yeah, and to be more patient. I remember when like when my this is a weird example, but it's true. Like when my trading capital was not that large, so I didn't have that much money in trading. Um, I could take losses much better because they were not meaningful. They were meaningful, like they were important, like it was legit money, but the I mean they didn't change anything at all on my life, and they still don't. But it's a lot more than it used to be. So the burden is much higher. So I think that having everything really set up, like I don't have sports cars, I don't have like a very expensive house or living or whatever, keeping everything as simple as possible so that you can compound into this business into many years. I think that's key. What people pass on the internet of these luxury houses and everything, like as a trader, they're not actually trading, they are selling you something. So
I
that would be
I don't completely agree. I was just about to make that point, because I was going to say a lot of the wealthiest traders I know, their expenses are very low, at least to their income level. Like the people that are making, I don't want to say like making a couple 100,000 a year is still very impressive. Still, you can still live a great life, but can you live a life with going on yachts and having a mansion and shit? No. Like it's just, that's not a realistic way to do trading, especially because we both know how much savings or whatever backup you need, so that you can live through drawdowns and things like that.
yeah. And you, like if you are a real trader, and you know that money is your tool, right?
Yeah.
If you have like $1 million and you the first thing you do is going to spend on a Ferrari or a Lambo, like okay, after taxes, how much of your tools do you have to work in this game, right? Now you have like maybe after taxes, after the Lambo, after the insurance and everything, maybe you have 200 or $300,000 left. Okay, great. Now you step yourself back like 60 or 70% or whatever. Yeah, that's not a real trader. A trader makes his income out of trading, and his trading you need tools, which is your money. And if you're going to spend it on stuff that is depreciating just to show off, sure, good luck with that. But I don't see a very long future on that. Now, there's a caveat, of course. If you have 10 or 15 million, walking on a Lambo doesn't make any difference, right? But
Yeah.
it's different in different levels, if that makes sense.